G'day, Bobby. How are you, mate? That's if you can hear me. Just let me know if you can hear me, and we'll Oh, g'day. Excuse me. Got a hot coffee in front of me, so ready and raring. Just let me know if I'm coming through loud and clear. Ah, fantastic. Good, mate. I'm good. Sorry also about the delay, guys. I don't know why. I think it's a delay between the system used to upload and YouTube. Not much we can do about that, but we'll work through it. All right, let's get into it. Welcome. Trade setup. Just a morning, I would say. I was going to say morning jump start, but it's more overnight markets. Take a look at those, how they reacted last night. Bit of a strange one, if you ask me. I still think there's a bit of mucking around in the markets, and even though it looks, sort of, we've got the Dow here. This was at 11 o'clock at night, coming into the open. Market was bearish. It looked a bit negative. Now, I always get suspect of these things. Just clean out the lows, previous lows. They know people are bearish, boom, up we go again. And pretty much turned on a dime. I don't think it was news driven. There was no news out in the US. And normally news comes out at, g'day, Lauren. News out in the US, or important ones, is at 10:30. That's Australian Eastern Standard Time. So whatever that means to, what are you, Lauren? You're in Queensland, same time, isn't it? So yeah, 10:30 at night. About an hour before the US market opens, they have their big numbers. Nothing really came out last night. The market's turned on a dime pretty much, and rallied. Now, my opinion, nothing's really changed. And I always get suspect of these things. It's a bit of a squeeze on the shorts. They set them up in the overnight market, boom, up we go. Because everyone's going to look at the overnight market and go, okay, the US, the Dow's heading lower, Europe's lower. I think Germany and the FTSE, and the DAX and the FTSE were heading lower at that stage as well, and then pop. And when it's not news driven, it's kind of suspect. It's some bargain hunting, but I don't think it's on very high liquidity or very high volume. The pop, and it's a perfect scenario. You can just turn around and squeeze out these shorts that are built up, because I don't think there would be. Well, I don't know the actual stats, but the markets are fairly thin in comparison to what's usual in a a bull market, or a calm market, a tame market with less volatility. I think the volumes are a lot higher. So when it's low volume, it's quite easy for someone to just come in and smack it, trigger a few stops off, see if we can get it running up, and just squeeze out those shorts. And lo and behold, the market pretty much gapped up on the indices. I think it's the S&P and the Dow opened up and rallied from the open. No, actually, so they opened lower and they rallied straight through the previous close from overnight or last night, yesterday. And finish on their highs, which is up near that resistance at around 26,004. This is on the CFD anyway, around the futures. Finished up towards previous highs. That was, a couple of sessions ago. So, and that's, you can see it on, if you go and look at the DAX and the FTSE, they were turned on the dime as well, pretty much. At one stage, it was heading south, and then boom, couple of big green candles in half an hour, just took off. So yeah, that was a positive session, but I'm always suspect that this is more, it's a more opportune time to sell if you're a long-term buyer. If you've had stock for a while, you could just sell into the pops. I don't suspect that this has got a bit of weight behind it, a bit of volume. Look, anything can happen, and what it really does is confuse the bejeebers out of people, I think. And people are sort of sitting on the sidelines, not knowing where to go long or short, or what's going on. Shall I hold? Shall I exit? What shall I do? And this, because the market is very choppy. And don't forget, it can be easily led by one comment or one tweet from Trump at an opportune time to buy the market, or just try to support the market, or whatever. It can really come in and turn the market down. Because if the market's extended on the downside, it can come out, pop it up with a tweet. Because it's not hard to pop it up when everyone's sort of focused down, they're holding short positions, bang, they'll just close, market squeezes up, and away you go. And the same, he's done it before into the open at 11 o'clock. 5 minutes after the open, say 11:35, nice tweet, popped the market up, gave it exactly what it wanted, which is, I think, right here. This is back on, was it the 14th? Popped it up, and you can see what happened there. Edged up, but it's always, back then it was right into this resistance zone. So that's held nicely. Longer term structure, we've got to keep looking at the longer term structure. If you're aching to get into the market, because we know we're on our lows. And this is what it can do. A lot of the times, the more and more the market sort of hovers around support, or it rejects support, it bounces off support, the more people are going to be looking at it going, oh, and it's the fear of missing out. I want a bargain. I want this, this stock's on its lows, da da da. But things could always go lower, and I don't think that the overall structure longer term it's not bullish. It is a bit of a fight. We've got this big power move down, bounce back up, found resistance at 26.40, 400, got absolutely smacked down, bounced straight back up again, edged its way back up, retested that low, that 26.400 level, pushed back down, retested these lows, you can see. But what it's been doing every time, it seems to be finding another offer. So not a bid, an offer, finding some sellers at around that 2600, say 26.050 zone. It's yet to be confirmed just yet. And the way it bounced last night, this could easily hold an inside high low. So you got the lows, a confirmed, high low at 25,370, another high low, and then press up. It could easily do that. It could pull back, off she goes. I'll just draw it up so it makes a bit more sense. So it can, sort of pull back here, start holding an inside level, and then bang, and then we could be on the road to recovery. I'd say, to me, I find that very hard to believe because of, we've got to remember we've got to trade what we see, not what we think, and it's hard sometimes to get it out of your head, the bearish mood out of your head or the bullish mood out of your head, because it's just, everyone's inherent to believe a certain side of the market, either bullish or bearish. I think we all are. I've always tried to look at what the market's doing and have a plan of attack. Okay, this is what I think. If I start to see a bid forming above 25.7 on the Dow, and I don't want to see it just like, you don't want to see this kind of thing bang it straight back up. That to me is not a bid. That's just a reaction. I'm always inclined to just do that again. I want to see something like this, some inside levels hold, because what that's doing is you've got sellers coming in, buyers soaking up earlier, pop back up, sellers coming in, for that lower high. And then if you get an inside higher level, higher low, anyone that's been selling up here could be looking at this overall structure also and go, well, look, I could be on the wrong side of the market. So we're holding a higher level off these key lows. Maybe the economy isn't too bad. Maybe the US is actually doing okay. And that's another thing they're looking at. Everyone's looking at. You've got jobs data is holding up well. The economy itself in the US is doing okay. It could easily turn because it is getting crimped by tariffs. But and that's why they're so focused on tariffs and the trade war, is because if they pull the pin on that and they come to some sort of arrangement, then really the US economy probably should get a bit of a spike or some support, and there's no need to worry too much about interest rate cuts. Now, they haven't been cutting interest rates purely because the numbers, their mandate that they follow, the US, Fed Reserve, the numbers are actually not bad. So it doesn't warrant the rate cut. Inflation's holding towards the lower end, but it's holding. Their jobs, the employment data is holding quite well. We've got that out next Friday in the US, first Friday of the month, which is next Friday. So they'll be waiting. We could get a nothing market until then, until they get some more jobs data, especially if tariff or the trade war doesn't kick off again. But at the same token, on the first, I think it is another 5% increase on $300 billion on tariffs for China. Could drag the market down. The US, the bond yield curve is still inverted. That's not changing, and it's not getting any better. You've got really long-term bonds yields are falling as well, so the 30 years. So that's saying that basically the longer term, if the longer terms of yields are falling, it's just saying that, okay, inflation ain't going to pick up anytime soon. And that's a longer term view as opposed to a short term 2 year. They could change quite rapidly because the cycle can only last a couple of years, I guess. 10 years, yeah, it's a different story, and you've got the 10 years dropping below the threes in yields. Then you've got the 30 years of really long-term bonds, which the yields are dropping what they're paying up for, and they're well supported. So if the bonds are well supported in the way of bids, it means that that's a safe haven investment, and they want the yield. And if it's flowing into bonds, then it's going to be flowing out of something which you would think it's flowing out of the equity market. So all these things to me are still, like I said before, I'm trying not to be bullish or bearish, but these are sort of the headwinds I think the market's up against. Now, if it does this action, you've got to negate that, because I'm always willing to accept I don't know something. There's a lot that I don't know. I try to decipher things. I'm not the world's best fundamental trader. I'm not the world's best macro. I'm an engineer by trade, uh, bachelor in engineering. I know nothing about economics apart from what I've learned along the way. So I'm not right into the your economics of the scenario of what's going on in the global economics. But what I do like and what I do understand, I think quite well, is the technicals. Now, if the technicals start building this scenario, I've got to wonder what's going on. It's looking to me like it's getting some support at higher levels, and it's ready, especially if it pops up through this zone. If you can see what I'm talking about, this is a clear sort of an entry zone. It's pushed back, soaked up at a higher level compared to 25.7. Another inside high it pops up. That's going to squeeze out the bears, and that would mean at least to a trade up to 26.4. Now, if that's around here, what's that? It's 400-500 points. So that to me, I've got to trade what I see, not what I think, and that could be a good reason to put on some longs, because if we get straight up through 26.4, brings back into targeting this. If we can draw that, this zone right up here. So yeah, we'll just have to see how it goes. Try to sit on the fence, because I don't think anything's just happening yet. We could easily retrace off here and just go boom straight down through here. We could hold a lower high if we start getting this action. Pressing down, we've drawn this a few times. If you start getting basically the reverse in play, I'd be concerned. And that is what I'm not preparing for, but that's why I'd be happily out of the market just at this stage. In the Aussie market and the shares, we've got a few on, but nothing significant. They're both going a short and a long. They're both going in our direction, which is handy. I think it could be worth, we could start getting this scenario, really start to focus in on gold, because gold could just really take off. I think gold is at that stage now. If you start getting some setups on the stocks, even though we've missed probably the boat quite a bit, there could be a lot more in it if this market caves in. But on the flip side, I don't want to spook anyone. I've seen this before through the GFC. Stocks could get hit when the fear really peaks. It doesn't matter what stock it is, And this is where you've got to be careful. You've got to also trade what you're seeing on each individual stock. Just because it's a gold stock and gold's rallying hard, if the proverbial hits the fan, that could still come under fire, because people are just trying to consolidate themselves, just go, I want out. I've taken too much pressure across the board. I'm cutting my losses on everything, even if they're up slightly on gold, and gold could be rallying. There could be still some pressure on the downside, because people are bailing across the board. And you've got ETFs as well. They could be bailing on ETFs, which part of the ETFs could be making up for some of these gold stocks. So if they're selling ETFs, there's going to be some sweep selling across the ASX itself, which could drive the market lower and drive those individual stocks lower. So, like I said, if proverbial hits a fan, you're better off looking on the short side, or looking at index trades on the ASX200 CFD or the SPY, or some options, buying some puts, something like that, to take advantage of the downside movement, if that's what's going to play out. So we've got to be prepared. I'll dribble that out again. We've got to be prepared for scenarios. You can't just go, oh, that's it, this is the low, I'm going in. You've got to be prepared that, okay, you can go in, that's fine, but what happens if you're wrong? You're going to know where you're wrong, know exactly where you're wrong, so you can take the risk off the table and keep an eye on. I'm a big one for keeping an eye on the overall market. You've got this is the hourly chart of this is Wall Street, the Dow. Looking at the others, probably the S&P is a broader market, similar. This is similar structure. It's heavy at 28.90. Could be good opportune time for longer term buyers or longer term holders to get out. Do you sell at a better price? You didn't really want to sell down here. It's bounced off support, bounced hard. They might be taking the option to sell here and continue this market heavy. And if that lower high holds, boom. This looks a bit more conducive to a press lower. Look, it's gone from overbought to oversold. Sorry, oversold to overbought. It's heavy. Last few times it was heavy is up here. Before that it was heavy. It was right up here. So if it's struggling, if sellers are coming in earlier, from 29.40, they're starting to step in at 28.90. That's going to cap that any sort of rally through 28.90. It's going to start pressuring it lower, which would, for me, start to confirm, if we start getting a race to the downside, we're going to confirm that lower high and press down through 28.26 down to 27.80, even lower. So not to scare anyone, but we have to be prepared for these scenarios. What's going to happen? What am I going to do? How am I going to attack it? If you're just a share trader, you might just take it by sitting on the sidelines, sitting in cash. I know a lot of people are, which is great. And I saw some comments between a couple of you on the forum about trading around positions. And I agree with what you were saying, and I agree with, was it Mark Minervani? whatever it is. Lauren will correct me. Um, you can't trade around a position when the market's free falling. It's impossible. It's stupidity if you ask me, because what you'll do is averaging down more than anything, and you could get yourself crucified. You want to, and a lot of the times the outlier events don't happen, but when they do, they can really hurt you big time, and that's what you want to steer clear of. Well, that's the idea anyway. So what do we got? DAX, to me, that's looking bearish, not bullish. You've got a break of this zone at 11.6, 610. Broke there, bounced back. Okay, it's still a bit heavy up here, getting into that oversold zone, and that compared to being oversold before that at a higher level. So if you're getting, sorry, I'm talking about overbought. What am I talking about? Overbought at a higher level here, overbought again at a lower level. That just shows to me it's more talking pressure on the downside than anything else. And I think the headwinds we talked about are stacked up for more bearish price action. It's the FTSE, the UK index, and that is heavy. Resistance up here, 73.06, further resistance at 72.20, say. Lower highs pressing into this zone. It's starting, it's grinding up off that zone, but that's not a bullish price action if you ask me. You want to see a pop, pull back, retest a higher low, and see some volume come in. If you can look at the index itself or the stocks, futures is probably the best thing to look at. See some volume coming in. It just means that you're either shorts closing out, happy to sit on the sidelines because they think there could be a bigger pop, a bigger correction higher, or the bull's starting to jump in, but it's not looking like that price action to me on the FTSE. yeah. Bury the gold bars. Get them while you can if it's going to rally. I knew a guy when I used to back it as a broking days years and years ago, 2000. It actually started 2000, I think 2001, 2, 3. That used to buy the gold coins and put them in a safe. He was just a raging bear, an absolute raging bear. So that was a great idea, except if you're a raging bear, you've probably been caught out the last 10 years or so. That's UK. So gold. Gold is me at the moment is caught between support and resistance, 1544. This is on the CFD. It's probably higher around the 1550 mark on the futures, and support around this 1530, say 35. It's just sort of consolidating around here, and that could be consolidating highs, or it could be a lower high. We don't know just yet. We've got to let the price action play out, but the way that it's getting supported when it's getting sold off, supported here, supporting at a slightly higher level, and the pressure of selling is the same. So if you've got pressure of selling is the same, but people are stepping at a high level, they're bullish. They're not bearish, they're bullish. We just want to see how it goes from here. Could easily chop around here, dung, 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 and then pop. Or, we could pop a wash and go down. We don't know. And we just really got to take it as we see it. So let's see where the ASX is open. That's not it. That's it here. Let's get that across. This is a SPY. Lo and behold, the SPY, it's cleaning out the shorts that built up in the last few hours. So you can see it popped up off. So this is at the close at 4 o'clock yesterday. Market's pressed down. 64.24, pretty much back to where it opened the day session. So this is the open of the day session. All right. Yeah, open the day session. We grinded higher all day yesterday into the 4 o'clock close, and then we turn around through the European session all the way back down again, pretty much to where we started, the day session. So overnight, that was about the open of the US, and then bang, up we go. So it took off, and then it sort of consolidated around those highs from about, what was that, 1 a.m., 1:30 in the morning. It just sort of held onto those gains into the US close as the US held. So to me, there would have been a lot of shorts coming in here, probably up at those highs. And it's quite convenient how the market will stop at the highs just below 64.84 and chop around. So the futures come the open is probably going to squeeze. It's going to take a squeeze on one side of the market. And it looks like it's squeezing on the short side just at the moment. Those shorts that have built up for the last few hours of the US session, squeeze them out. And then from there, we just got to take and see what happens. It's quite choppy, this leg up, and it has been, the trend is up. This is on the 30-minute too. Pull back to the MAs, hold, pull back to the MAs. What I don't like and what I don't see as bullish is it pops up above the MAs, back below the MAs, back above the MAs, and it's not taking out the highs anything significant before it sells off again. Back below the MAs haven't crossed, and then back above. You can see that sort of action, and it's pulling back below the MAs. So it's just really squeezing. It's just choppy and it's and it's very hard to trade. That's why, even intraday, I've got to find the trade that I was looking at. I did miss something, but I wasn't really focused on it because I thought, look, the action's choppy. Let's just focus on some shares, see what's playing out. A few that I've got my eye on, but that's about it. So yeah, choppy action. Looks like we're squeezing. We're going to squeeze up to 64.84. We'll have to see how it goes. If we pull back and start to hold, if we can see intraday here, if you check out here, this is about what we're looking at as a long, just in here. It popped up. I was thinking bearish at that stage, off the 5 minute anyway, but the 30 minute was really a pullback to the MA, and that was about, what was that, 11:30. Pullback to the MA, held. So 5 minute, you can show you probably a trade. I think it was on, no, it was actually on this candle. But it was just, it's not going to come out. It's just there. So we'll show you that in a second. But that action there is bullish, and that's what you got to squeeze up into the close. So if we do something similar, have a bit of a pullback, maybe wash out these lows and start to reset, just below the MAs or something, and start to get a 5 minute setup, then it could be worth a go. We'll just keep an eye on it. So that's the plan of attack. I think it's going to come up into those resistance zones. For some reason, I think we're overly strong, in my opinion anyway, in the market. But we'll look at the ASX in a sec. Whoops. Where are those levels? So this was the open yesterday. This was really the only trade that I saw. I actually liked. You can see the double bottom play out here. So I'm always liking that sort of situation. Double bottom, market's pressed down, it's popped up. You've squeezed out some shorts through this section, into the close. Squeezed them out, pull back, basically held a 5 minute higher low, and you can see the two actions, two movements lower, didn't break any levels, didn't take out the lows for the from the open. Easily buy above that candle there, say 64.30, 31, stop below, and you had pretty much, it's not your typical trade that we use for the shares, but it's quite good action. It's the same sort of principle. You've got these, wash out lower, MAs are holding, MAs are crossed up, off a key double bottom, you could call it, break of a level of a recent lower high, all these sort of factors, and then you can see that press higher. I think it was a bit of probably stop out about here, but if you can hold it, you've good 15 to 20, 30 point gain. That was about it for me. I was looking at around here, but for me, it was just, I was actually had a sell stop. I had a sell entry just below that level. For some reason, I'm looking at I could go anyway, but I chose the sell side. Nothing got triggered, so it actually started to grind higher. That was it for me yesterday. We'll see what happens today. ASX is up 3.3 points. It probably would have thought after the ASX close that we should have opened down, say 5 or so, or even break even. It actually is opening up slightly stronger. Let's just look at the 30-minute action. It's probably going to come up, say the ASX is going to come up into that resistance zone. It could even hold around 65. That move up is not very strong. The same with the previous move up. So the downward movements are quite heavy. But when it starts to chop around at a lower level, like it did here, below this level, lower high potentially coming into play, we could be seeing something very similar. Could chop around here, and then we might get a down night tonight. It's extended on the the 30-minute chart intraday, and we could get another movement down, and then we'll have to see what happens from there. Does it just come back down and retest support at 6400, 64.25, and then bounce again? What happens from there? Also, we can take it a day at a time. All right, guys, might finish it there. Any questions? Well, my coffee's going cold. I'll have a sip. Chuck any question if you want. Otherwise, we'll probably just call it a day and then see how it plays out today. I wouldn't expect too much, to be honest. From the last previous couple of days, it's been grinding higher. We're coming into a key sort of resistance zone. Overnight markets are looking heavy. US, all that looking heavy. But in saying that, nothing to say it can't go higher. If you're intraday trading, just look for those key. I'm looking from the 5 minute and the 30. So the 30 minutes up, I'll probably look for a pullback on the 5 because I want to go with the 30-minute trend if it's going to continue. And if it doesn't, I'm probably going to get a few points out of it or break even, I'd say. But I'm looking for that oversold situation on the 5, looking for that continuation for the 30-minute chart, and looking for that, especially if it spikes lower, MAs are up, boom, exactly what happened yesterday. All right. Looks like no questions. All right. We'll probably call it a day there. Thanks very much for joining us. Back in probably more than likely tomorrow morning as well at around what's tomorrow? Friday. probably around the 9:45. So just beware of the time it chops and changes because kid duty. So I got one boy home today who's sick, and the little girl had to go. She's a kindergarten. She starts preppy next year, and they've got one of their meet and greet days now for an hour. So she's off there now, and someone else is dropping her off for me. But we'll see how we go. All right, guys, fantastic. We'll see you again tomorrow morning. Just keep an eye on that time. It could be 9:40, 45, or 50, somewhere around the quarter to 10 mark. And we'll see what happens tonight. Good luck today and enjoy your day. Any questions, feel free to send them through to support@tradesetup.com.au. Cheers, guys. Bye.